Hello and welcome. You are watching Business Plus here on News 9 Live. I am Krishna Kumar and I'm being joined in the studios by my colleague and friend Suyash Maheshwari. And as always, we begin this afternoon edition of Business Plus with a check of how India's stock markets closed today's trading session. Sensex up over 300 points while the Nifty is back above that 19,000 mark, isn't it, Suyash?
Yes, Krishna. So after a muted opening in which, we saw Nifty even dipping below the 19,000 mark within the first hour or so of trading, Nifty and Sensex both not only paired all losses but then added to it and ended with moderate losses amid buying interest in index heavyweights like Reliance Industries, your HDFC Bank, your ICICI Bank. Now at close, Nifty was up 0.49% with the last tick for the benchmark index coming in at 19,140 mark, which was just about 18 points shy of the day's high. So we are pretty much close at the day's high, which will augur well for the bulls. Sensex, on the other hand, as you rightly pointed out, ended about 330 points higher, closing well above the 64,000 mark. Now the broader markets were underwhelming today. Both Nifty Mid Cap 100 and the Nifty Small Cap 100 ended with moderate gains of about 0.1 to 0.15%. Now shifting focus to sectors, Krishna, Nifty Auto and Nifty FMCG were clear underperformers today. Apart from Nifty Auto, Nifty FMCG and also media, which closed pretty much flattish, all other sectoral indices closed in the green. Now Nifty Auto declined by about 0.9%, whereas the Nifty FMCG pack was down about 0.5%. Nifty Bank, on the other hand, Krishna, continued to build on Friday's momentum. On Friday, we saw a jump of about 500 points. Today also, Nifty Bank closed about 0.6% higher. And what's more important, I feel, is that it has reclaimed that 43,000 mark, which according to analysts is going to be the make or break level for the index. So if the index continues sustaining above 43,000, we can perhaps see a move, up move from here on. Otherwise, the weakness is expected to continue. At least that's what the analysts are expecting. Realty pack was a top gainer in today's session. Nifty Realty ended with gains of about 2%, over 2% actually. And other sectors that I'm looking at, the pharma pack ended about 0.25% higher. The metal pack was up about 0.23%. The PSU banking pack was up about 0.14%.
That's right. PSU Bank up as well, Nifty Bank up as well. That's how the broader markets were. We have Mr. Aamar Deo Singh, Head Advisory of Angel One, set to join us on the show to help us break down the day's trading session. But one thing I want to ask you before that, Suyash, is that if you checked the volatility index, India VIX 2 was up over 5% for the day's trading session.
In fact, Krishna, in the morning trade, the index was up about 10% or so. So, the volatility has reduced, but yeah, it's elevated. It's elevated compared to other days. And I think the volatility, India VIX is currently below the 12 mark. So that overall indicates that the volatility in the entire market is expected to remain low, at least for the next 30 days or so. But yeah, a decline in volatility will augur well for the bulls, especially after the kind of bounce back we have seen in the last couple of sessions. Nifty tested that 18,800 mark. Again, I think it tested the 18,900 mark today, but we have seen a good bit of bounce back from there on. And Nifty not only has, scaled 19,000, but sits very well above it, above the 19,140 mark.
All right, fair enough. Let's now take this across to Mr. Aamar Deo Singh, Head Advisory Services at Angel One, who joins us live on this broadcast. Aamar, great to have you on the show. Talk to us a day which didn't begin all that well, ending very well for India's main indices. Sensex up over 330 points, Nifty back above the 19,000 mark, but still volatility index continuing to be up above that 5% mark.
Yeah, I would say if you look at Nifty over the last few trading sessions, I would say beginning from somewhere around mid of October, that is around 14, 15 October onwards, we've seen Nifty witnessing a significant slide, almost 1,000-point correction we've seen in Nifty. And then what we are seeing right now is that a bounce back is there, and that was expected also, because if you look at most of the indicators, they are clearly pointing that they were in oversold territory, and also looking some of the heavyweights that also was displaying the same thing. And Reliance definitely did play an important role today for the pullback that we witnessed. And also, if we look at the global markets, there are concerns, but it doesn't appear that the Middle East crisis would really go out of hand. So I think that's what the markets are expecting and anticipating and factoring in. And also, as you rightly said, that India VIX did move up by more than 5%. I think at a point of time it was around 8 to 10% up. But see, the important thing is what's the range that we are looking at India VIX. So India VIX still does not trade above the 12-14 level. So because trading above the 12-14 level would be a sign of concern, and if it starts sustaining above that level and above 20, then we are in for serious sell-off happening. On the downside, yeah, these are levels which are very well the markets are expecting, and the investors have also and traders have also accepted that this is the way it is going to be. We'll have volatile trading sessions, and one needs to be prepared for that, given the geopolitical tensions and other global factors which are at play.
All right, so jaisa hai, vaisa hai seems to be the attitude that the markets are taking towards global uncertainties at this stage. The question I want to ask you is many analysts are talking about an impending correction for the run-up over the last 6 months. Many are convinced that we are, at the end of the day, in the middle of bear markets. My question is, are we bottoming out now, or is the bottom expected 3 months from now, say in December?
Yeah, I would say that if you ask me, we are definitely seeing some sort of higher levels topping out. So what it effectively means is that the highs that Nifty had made close to 20,000 levels, we've seen it. The earlier level somewhere around 19,750 and then around 20,000 levels. So that clearly tells that there is very high selling pressure at those levels. And there's a lot of selling coming into all different categories of stocks. So be it the large cap, mid cap, small cap, we're seeing it across there. As far as technically speaking, I would say till the time I don't see Nifty sustaining or trading below the 18,500, 600 zone, I would say that the trend, long-term trend on the quarterly charts, that continues to be strong. There's no doubt about it on the Nifty. Now on the monthly and the weekly charts, we are seeing some sort of a momentum loss of momentum on the monthly charts. And the weekly charts are clearly pointing that there is some weakness there. So what it effectively could mean is that higher levels will be sold into, and we could see some lower levels as well. So 18,500, 600, that's a very important crucial zone on the downside. On the upside, I would say once we start seeing Nifty sustaining above the 19,400, 500 zone, then we could say that, yeah, that now we are in for some up move. So it could be more of consolidation as some of the technical indicators are pointing. I wouldn't say that we are getting into a bear market right now.
All right, fair enough.
Sir, my question is, what's your overall read of the sentiment of the market? I hear that you expect some sort of a consolidation going forward, but is it still a sell on rise market, or has at least a near-term momentum improved, given that the kind of movement, 200, 250 points movement we have seen in Nifty in the last couple of sessions?
See what's happening in some of the indices. I'll talk about, for example, Bank Nifty. So Bank Nifty, what we've seen is we've seen a significant correction from almost 46,000 levels to 42,000 levels. Now, where the market is, Bank Nifty currently is, the recent low, that's something which is very important, very crucial. So what it effectively means is that if these lows are breached, then we could see some further sharp sell-off happening in all across the board. And as far as Nifty is concerned, I would say again, for Nifty, the level would support somewhere around 18,800 immediate. But below that, if Nifty starts trading, then 18,500 is a level where 500 to 600 is a support zone for Nifty. So for traders, I would say it's like if we talk about today itself, the way we saw some correction, and then there was a pullback and markets closed very close to its highs. So what it tells me is that there is buying interest which is also coming in. The only question is that is there a follow through? And the follow through would have to be in the major large caps and in the front lines. So whether we'll have to watch out if that's happening. And the second thing is you'll also have to look at the advanced decline ratio, because that's a very I would say good indicator to tell us the overall sense of the strength of the overall market. So currently we saw that today also the advanced decline was in favor of the advances. I'm talking about the overall all the stocks put together. So that tells me that it would be more of buying at lower levels, selling at higher levels. And as you said, some of the technical indicators do point that there could be more selling at higher levels as well.
All right. Fair enough. At this stage, of course, the story of the day is that the broader markets have outperformed the headliners, but we need to check in on what were the big gainers and losers as far as stocks are concerned. Suyash, talk to us who were the top gainers and the top losers in today's trading session.
Yes, Krishna. So let's look at the gainers among Nifty, among the blue chips first. Now, BPCL was a top gainer in today's session. The stock, in fact, snapped out of its 5-day losing streak to rise about 3.5% in today's session. Now, BPCL has reported a net profit for the September quarter against a loss in the year ago period, and marketing margins have also improved on the back of a softening of crude oil prices on a year-on-year basis. Another gainer was Ultratech Cement. Ultratech Cement, in fact, extended its winning run to about 2 sessions. Yesterday after the market hours, there was news that came out that the Aditya Birla Group company is looking to, has committed, in fact, 13,000 crore towards capacity expansion. So I think that was one of the reasons why we saw, 2% jump in the stock price today. ONGC was up about 2%. Reliance also gained almost 2% in today's trade. Now, of course, this was on the back of a good set of numbers coming from Reliance Industries. The conglomerate on the whole saw double-digit revenue growth in the retail segment. The telecom business also saw a steady improvement on a quarter-on-quarter basis. Now, I was reading some of the brokerages report this morning, Krishna. Good outlook from brokerages. Jefferies, in fact, has given a buy call with a target price of 3,000 rupees. Now, this implies an upside of about 30% from today's closing. Now, Kotak has also upgraded the stock from buy to buy from add, and has raised the target price to about 27 and 25 from 2600 earlier. JM Financial is another one which has maintained its buy call on the stock, and it has a target price of about 2900. Now, SBI Life also gained today about 1.7%. Now, among losers, Krishna, UPL was the top loser among blue chips today. In fact, it did come out with its results right as we were stepping in the studio. So, I mean, the firm has reported a net loss of about 190 crore. The street was expecting a profit figure of about 300 crore. So, a major miss on that profitability front. Also, the company has cut the revenue as well as EBITDA guidance for the entire year. And in fact, it sees EBITDA declining for the full year, whereas it was expecting a positive figure.
So no operating profits at UPL for the current year is what the scenario is looking like.
That's what the guidance coming out from management is. Of course, we'll hear more as and when the earnings con call is, happens. Tata Motors was also down. Tata Motors was down about almost 1.8 to 1.9% or so. In fact, it was on the back of a broader decline in auto stocks, as we saw Nifty auto corrected by about 1% in today's trade. In fact, Tata Motors, as I can see on my screen, was a top loser in the entire Nifty auto pack. So, good bit of run up it has seen year to date and on a month-on basis, but we are seeing some profit booking taking place at higher levels. Maruti Suzuki was another loser today. It corrected by about 1.5%. Now, this was despite the company reporting a good set of numbers in which it saw, highest ever sales volume on a quarterly basis, highest ever profit, highest ever sales in, in rupee terms. But it seems that, after touching that record high on Friday's session of about 10,850, the stock is seeing some sort of a profit booking take place. Also, this morning some of the brokerage calls came out. Citi expects, Maruti Suzuki to rise as much as to about 14,500, implying a upside of 40%, Krishna. Nuvama has also upped its target price to 12,500, and Motilal has also raised it from 11,900 earlier to about 12,300. Eicher Motors and Axis Bank were also among top losers in today's trade.
Clearly, Auto Pack losing some biggies in the day's trading session. Aamar Deo Singh is still with us. Aamar, your thoughts on the big gainers and losers in the day's trading session? Auto Pack clearly emerging as a big loser.
Yeah, I would say that among the gainers, we've seen some sharp up move in Reliance, because we saw that post its results, Reliance has bounced back. But overall, if you look at Reliance hasn't delivered, I would say, returns to its investors over the last few quarters. So clearly that tells me that on the downside, it's got very strong support coming on the 2200 level. So from a long-term perspective, that's a level to watch out for. Whereas again, on the upside, I would say somewhere around 2400, 2600, that's a zone, upside resistance zone for Reliance. The long-term charts also clearly points towards more of consolidation.
Right, we seem to have lost that connection with Aamar Deo Singh, but those are the top gainers and top losers for the day's trading session. We'll wrap up our market coverage for the day. Thank you, Suyash, for taking time out to be with us and helping us put in perspective the day's trading session. And with that, we move forward here on Business Plus to India's $30 trillion dream. That's right. India as an economy could be worth $30 trillion by the year 2047. That is 23 years from now. The problem here is, at what rate does Indian economy needs to grow to reach that figure? Because bear in mind, we're at $3 trillion at this stage. And they say to become a $5 trillion economy by the year 2028, we need to grow at 7.6%. But currently, RBI's own projection for the current financial year and the next one is around 6.5%. The World Bank's projection for India's GDP is just around 6.3%, and so is the IMF's. But do you know how much it will take for India to grow to become a $30 trillion economy by the year 2047? It could take 9.46%. That's how much. So how will that delta be bridged? To understand this better, to understand how close, how possible is India's $30 trillion dream, we have Mr. Srinath Sridharan joining us live on this broadcast. Srinath, thank you so much for taking time out to be with us here. I just want to begin by asking you, Srinath, the numbers don't seem to add up at this stage. The way growth rates are right now, 6.5% odd, and we're looking at a so-called IT washout year. Going forward, the India's IT sector having a washout year as well. In these circumstances, for India, they say to become a proper high-income economy, to exit the middle-income economy trap, it needs to grow at 7.6%. And to achieve the $30 trillion dream, the number is anywhere between 9.5% to 10%. How do you view these numbers?
So I think Krishna very rightly used the word called the dream, right? I mean, there's an aspiration for every country, and we should have that dream. But economists and analysts who run these Excel sheet models don't realize much of those people who comment on these numbers may not be alive when these numbers actually get done. I mean, that's a reality. So I think a lot of it is also optical narrative that we need to get going. But having said that, can we use some of these to bring it into the micro planning, especially, for example, the 16th Finance Commission is going to be formed. So will these also form an input, lot of input to not just the central government, but also the state governments? Because central government alone cannot do much of weightlifting here. So that's one question that we need to have. And considering that Niti Aayog has been tasked with doing this, how will this play it out politically? Because Finance Commission is a political institution. End of the day, it deals with the political challenges of the federalism there. So I have my doubts about a lot of these plans. These plans are good. These plans, if we can make it into a national mission, great. But again, as the corporates, what we do is we typically roll out a mission and have a dashboard of where we are on a monthly basis or a quarterly basis. So can we get that done as a country? Otherwise, a lot of these are only meaningless, according to me.
Right. Also, talk to us about, for India to achieve this, dream of being worthy of an economy. Take a look at those estimates as far as exports and imports are concerned. By 2030, we're talking about $1.8 trillion or $1.9 trillion worth of imports versus about $1.58 trillion worth of exports. And then by 2040, that number triples to 4.56 and 5.92, and by 2047 that number has to be more than $8.5 trillion worth of exports and over $12 trillion worth of imports. And Srinath, I'm going to keep this question very short. We know the challenges we're facing when it comes to managing our balance of trade, and at a time when we're trying to deal with that, how do you see these projections? India being able to achieve that quantum leap as far as both imports and exports are concerned.
See, I think we are probably betting on the geopolitical heft that we will end up having the next couple of years, and the larger economy that India would be, its ability to demand or negotiate better deals and margins for itself, which I think there is already work in progress, right? If you look at the various FTA that India has been signing bilaterally, apart from the multilateral institutions or regional blocks, India has been signing a lot of FTAs. So a lot of those could come in handy in achieving these numbers. So here, I think we've already put together a plan. Whether we'll achieve those numbers or fall short of it, that's fine, but there is a plan. Our larger intent should be, are we actually on the ground? Is our industry ready to deliver those? Because exports have to be delivered by the industry. At this point in time, I think the next 10-year runway that it shows should be able to, but will the states match it up, not just the center? That's a big, big question mark again.
Right, state administrations, will they match it up? We will continue that same argument further, take it further to per capita GDP. Look at those numbers. We need to be having per capita GDP of over $4,400 by the year 2030, over $10,000 by the year 2040, and over $17,500 by the year 2047. Those numbers sound like sweet poetry, but the thing is that poetry is what they say it is, isn't it, Srinath? Not always fully factual.
So poetry is for those who read literature or those who are having a drink, or is it actually for the economists? So the challenge, you're right, Krishna. I mean, these numbers look very, very sweet. Are they tenable? Looks very, very difficult. Growing at 9 to 10% annually for a long period of time, I think no other country has done this. So I have my ifs and buts there. And end of the day, let's face it, we live in a geopolitically volatile times. And I think it is not going to be easy. I would be probably little realistic. I don't know whether it is the political optics of an election year, we do these numbers or what, I am not too sure. But I think from the industry perspective, I don't think any industry is putting these large numbers out yet.
Okay, then any industry is being able to do that, is the word coming in from Srinath Sridharan. Srinath, thank you so much for taking time out to be with us and to help put that $30 trillion dream into perspective. I'm going to ask you one last question before I let you go. The one question is that how do we approach the Indian economy and its growth going forward? Then if you don't want to believe in poetry, tell us some prose that we can we can go by.
So I think I want to here quote the famous author, psychologist, Dr. Scott Peck. His book, Road Less Traveled, the very first sentence is, life is difficult. I think if we can fathom that and say growth is difficult, growth is attainable, but it will come at a cost. I think we'll have to be very realistic there. And I think painting some of these without on a broad brush kind of negates or forgets that there are challenges. Growth is aggregate growth. It does not mean inclusive growth. I would be very happy if Niti Aayog brings conversations around inclusiveness of saying how do we ensure that every state of socioeconomic segment will also grow, not just apart from the aggregate growth that the Indian economy will have.
All right. The one thing I will say is that, never say never. Never say it's impossible for us to grow at 9.45%. I'm always looking for us to cross the Rubicon. And, as far as India's growth rates are concerned and exit this 6.5–7% region and get into that 9–10 double-digit percentage, why not? We have what it takes to get those growth rates that China did in the 90s. It's just a matter of, getting our resources together. And as you said, the center and the states together to perform at their best of their abilities to get there. But for now, Srinath will let go of you. Thank you so much for putting things into perspective as far as India's $30 trillion dream is concerned. Away from all those big data, it's time now to talk about how big data is going to come to you. Is it going to come to you via satellite? Is it going to come to you via fiber? Because there is a face-off that is happening, ladies and gentlemen, in India. Even as Elon Musk's Starlink satellite internet service is looking to enter the Indian market, Mukesh Ambani and the Reliance Group's Jio Fiber and Jio Air Fiber are revving things up And not just that, they're not just revving things up, they're also asking for funds, for USO funds to set up the infrastructure needed for this satellite internet. What does it mean? Are they posing a challenge through the back door by asking for these USO funds, posing a challenge to Elon Musk's Starlink's entry? We have the founder of MediaNama, Mr. Nikhil Pahwa, now joining us live on the broadcast to help put things into perspective. Nikhil, thank you so much for taking time out to be with us over here. Talk to us about the latest. We're all excited about GeoFiber, GeoAir Fiber, Starlink, but here the coveted lady seems to be the Indian market.
The Indian market is huge. You know, it's the second largest internet market in the world. Indians are consuming something like 200 GB of data per user per year, and we're paying around 10 paisa per GB, which are amongst the lowest internet rates in the world. So, you know, it's the hottest internet market for everyone who can't get into China. But it's also just from an internet infrastructure perspective, it's a hot market, but I can't say it's the hottest market from internet infrastructure perspective, because if you go back to 2008, I think there were some South American telecom operators that were interested. There were many European operators. There was a Russian operator, Sistema, that had entered the Indian market. So, in fact, what I tend to see is that while there is a move to launch more and more ways of accessing the internet, because the internet market is so hot and there's so many users, I think the competition for internet access is actually lower than what we have seen in the past. Remember, at one point in time, India had some 12 telecom operators running. Now we have largely 3 that dominate. So it's interesting, but amongst the latest news is also that you've got geospace fiber that is being planned. Airtel's got OneWeb. From what we can see from the submissions to TRAIs, to telecom regulators, consultation on auction for space for satellite spectrum, it looks like Amazon is also interested. They've made a submission in their own name for the first time, so that's a surprise. We're going to see some interesting moves taking place here.
Right, I want to focus on that USO, or Universal Service Obligation Fund, USO funds that Jio is now asking for. Reliance is asking for around 70.
I can't hear you clearly, KK.
Right, Nikhil, can you hear me now? 1, 2, 3. Right, I don't think you can hear me, can you? All right, we will try to reconnect with Nikhil and see if he can hear us. Nikhil, if you can hear us, the question I want to ask you is that the Jio Reliance is asking for 75,000 crore rupees worth of USO funds, which is Universal Service Obligation Funds, the funds that will be used for capex and creating this infrastructure for this kind of an internet service to come through. Your thoughts on that?
So, look, the USO fund is something that you and I have paid for, right? We are internet consumers. Every time we pay our mobile bill, we contribute to the USO fund so that people who don't have connectivity should be able to get it. And so in that sense, there is a Bharat net optical fiber rollout that has taken place across the country with the help of the USO fund. The only thing is that only half of that USO fund, or less than half of that USO fund, has been utilized. Like, it's a 140,000 crores of rupees in the USO fund, and only 74,000 has been utilized. So there is money available. What we need to do is utilize that to improve internet access. Frankly, for those players, and I don't think it should be given to a particular private player, but we should look at underserved areas, especially in the hills in India, where internet access is difficult, it's complex. But also, let's not forget that one of India's biggest weaknesses when it comes to internet access is that our wired internet rollout is very poor. You know, we have to rely continuously on spectrum auctions and spectrum being given to telecom operators to get this to work. So I think if I have to say where should that fund be utilized, I would say that we need to give more SOPs to wired internet users, because you know, more usage is actually cheaper on wired than it is on wireless. And if you really want to make the internet accessible to the poor, We need to roll out wired internet access wherever possible. We need to encourage community internet networks, Wi-Fi mesh networks. I don't think Jio should be getting this money. I don't think Airtel should be getting this money.
Fair enough, but the fight here at this stage seems to be in space. Starlink, Elon Musk versus Mukesh Ambani, as far as bringing space internet into India, and who gets to get a lion's share of that game.
I would be very wary of letting Elon Musk into this market. Because if you look at what he's done in Ukraine, where he pulled internet access at one point in time, that put lives in danger. At least that's what's been alleged. I would be very conscious of letting such an
but he's the man who's getting trolled now. Who's getting trolled now for saying that he wants to provide internet to Gaza, to the Palestinians in Gaza.
Yeah, so look, if you're playing in politics with internet access, then I think India is not the country for you. If you're playing politics on the internet, like we saw with Chinese apps that were becoming a national security risk, I don't think India is the country for them. We need to be very careful about who gets in, but I want to just make it clear, it's important for us to let more players in. Because look at it, right? Today, Airtel dominates mobile and wireline. Jio dominates, is the largest player on mobile. It is probably amongst the larger players on wireline. Now, even in satellite, you're going to get the same players in. I think there's a market concentration in terms of internet access that's taking place. And these are the same players that are basically trying to abuse their monopoly power when it comes to net neutrality. So, maybe we need a little more competition in this space, because what happens with players that become dominant is they start doing rent seeking, which is what Airtel and Jio, to my mind, seem to be doing. And when they're asking for network usage fees from internet companies, and which will come down and make internet users more expensive for users, we need to basically let new players in. Who those new players are, I really can't say, but I wouldn't be comfortable with Elon Musk. Maybe an Amazon will be a more responsible player in the space. Maybe at one point in time, Google had hotspots in railway stations if they want to get into it. But I would say that satellite and even on wireline, you don't want just two players owning the space. That's not a good situation for the Indian market.
But it's an inevitability that we are probably dealing with over here. Musk, at one stage or the other, we know the kind of conversations that he's already had with the Indian government officials. He's not backing off as far as making his India entry is concerned. The face-off is inevitable. But my question here is that at the end of the day, the conversation, I think, eventually has to be about which will bring down internet costs for the users over here. All of this space internet, wired internet, wireless internet, because Jio's argument of putting those 75,000 odd crore rupees into use is essentially means that that will result in the average cost per user coming down, along with more connectivity and penetration.
So the Alliance for Affordable Internet came out with a report a couple of years ago, which gave a more holistic picture of internet access. One important aspect of that is the device cost. In fact, that's why we have many shared devices in the country, because devices are still expensive. When you're charging 10 rupees per GB for internet usage, really internet costs in this country are not expensive at all. It's amongst the cheapest in the world. If they go lower, sure, that will be useful. But what really helps is actually improving access. There are many parts of this country, especially in hilly areas, if you go on the highways, in many parts of the highway where internet access is not available at all. So I would say the idea is not to bring down costs any further. The idea is to basically, bring down the overall cost. That is, the handset costs need to come down substantially. And I think as a country, we're doing very well there, because we started rolling out manufacturing in India. Okay. There is also, Rajiv Chandrasekhar talks frequently about India becoming a semiconductor hub. And, imports are expensive. Even with the manufacturing facilities, those handsets are normally just assembled in India. So as we start moving up the value chain in manufacturing, device cost will go lower, and that's what will improve internet access and cost of internet access, because data cost is now no longer a problem. We used to pay 250 rupees a GB back in 2015 and 14 and 15. It's after Jio came in that it's now 10 rupees a GB. That's affordable for people. I don't think that's a problem.
Okay, so of course, the point always is that we get 5G. What is the quality of 5G that we are going to get? We have 4G. What is the quality of 4G that we have? And then eventually 6G as well. Let's improve the qualities of the 4Gs and the 5Gs and 6Gs that we have. That's where the focus needs to be. I'm going to thank Mr. Nikhil Pahwa at the stage and let him go. Thank you so much, Nikhil. Pleasure talking to you as always, and hope to keep having you here on Business Plus again and again. But for now, we'll let go of you and we let go of that subject when we move our focus to a subject that all of you have been obsessed with. It's flooding your social media feeds, irrespective of which platform you're on, and that is the debate about the 70-hour, yes, 70-hour work week that Infosys founder Mr. Narayana Murthy spoke of, that has elicited polarizing reactions, and we're continuing to discuss that because there is a lot to discuss. How much is too much work in a week? And to help us understand that, we have somebody, a very special gentleman joining us here live on this broadcast, TV9 Network's editor international, Mr. Sridharan, joining us here. Shri, great to have you here on the show. I mean, what better person than ask you? You've been a part of workforces in India and the US, a global Indian in that sense. Tell us, 70-hour work week. You've seen the reactions.
Yes.
You've seen all the big founders and the big entrepreneurs saying that yes, I absolutely agree with him, and the rest of the internet going, hi, what is the what is the pay of the person who joins Infosys today, and how much has it changed in the last 12 years?
So,
your thoughts?
So Krishna, I'm going to bat for Mr. Murthy, and frankly, I don't mind if I get crucified on social media for defending him. Because I would like you to be my, the devil's advocate and challenge me on this, because after all, what has Mr. Murthy said? He said that the youth of this country need to work harder. 70 is a number he threw, but what he really meant was that they need to work hard, right? Yep. To build this country into what we expect it to be. A large economic powerhouse, a country that uplifts more people out of poverty, and gives everyone a fair chance at a decent living, right? So I think this has been taken totally out of context, and especially the IT industry has reacted fairly badly to it, largely because it is a fact that India's IT industry works very hard, because one, we are an offshore destination, we are 24/7 pretty much, and we are catering to global clients, so people are working on weekends, they're working at night, like pretty much around the clock. You know the drill, right? But I think what we need to take away from this is a very important message. Mr. Murthy, who obviously has worked more than 70 hours a week for many years of his life to build a company which today is valued at, let's say, $65 billion. I think the point he's trying to make is that if we aspire for something good, it is not going to come from business as usual. If you want to build an extraordinary company, you need to have extraordinary people who are willing to go the extra mile. And the problem, Krishna, is that it's the 80-20 problem, if you will. What do I mean by that? Like in every institution, organization, every country, you have 20% of the people pulling 80% of the weight, right? So that is the same situation that we as India also face. When people, youngsters in IT industry are upset about Mr. Murthy's comment, they are only thinking about themselves. But I think the point Mr. Murthy is making is a larger point about youth in general, right? So we need more youth to, of course, get educated, to become productive members of the economy and work hard to raise the standards of living of not just their own family, but also the GDP of the country. So I think that's the larger point Mr. Murthy is making, and it's unfair to troll him in this fashion without really understanding the meaning of that's behind his message.
Okay, here's my 2 cents on it, Shri, and I'll give it back to you because I want your thoughts more on this as well. One is that I thought the conversation began about productivity, improving productivity. And I thought, productivity, the argument at least on dinner tables across Indians, affluent Indians in India, is that productivity cannot be measured in terms of number of hours clocked in the office.
Absolutely.
Somebody can do a job which somebody else can do in 5 hours, can be done in 2 hours. So
Correct.
that person is done in 2 hours,
Yes.
should not be put through the trial of
Yes.
having to put through 5 hours. These are the kind of debates that are happening on dinner
Right.
tables. You know that. What are your thoughts on that?
So it's a good debate. So it is largely true that you cannot, in general, measure productivity by the amount of time anyone spent, clocking hours. But that's only the general rule. There are exceptions, right? You talked about people who could potentially be very productive by just spending 3 hours a day. But then those are the outliers. We're not talking about outliers. We're talking about people in general, the norm, the average, the mass which companies deal with, companies like Infosys, and even many other companies deal with. So I think in general, those people will benefit if they work harder, they look at more productivity tools and figure out how they can become more productive. Not necessarily like kill themselves 12 hours, 14 hours. That's not really what he's, I think, driving at. He's saying that we need to work hard as a nation. We need to work smart. We need to be more productive. So I think that's the core message that's coming out from Mr. Murthy. And ultimately, Krishna, the work is a choice that all of us make.
Yep.
Even if, let's say, if a manager were to put a gun to your head and say, okay, go sit at your table and work 14 hours. But if you're just going to go back and doodle and twiddle your thumbs, nothing's going to get done, right?
Absolutely.
So, yeah.
So absolutely, I completely agree with you. That's where I'm trying hard to be the devil's advocate here, Shri, because I'm largely in agreement of being the productivity argument. I completely agree. But what I will tell you is this. This, I think, largely looks like an argument between boomers versus zoomers. The boomers always believe that whatever we do, we were doing nation building. The zoomers don't have that kind of affinity towards this term nation building because they believe that every business that was built, everything that was built was done at a very selfish level to start with. They wanted to have a good company because they wanted to make a name, and that company eventually contributed to the country. So how can you ask me? And also the term, the nature of the term ambition is, the definition of ambition is changing. Today, definition of ambition is not letting go of all your personal time and life and just achieving that one trophy at the end eventually. Because Zoomers are saying that achievement is not just winning that trophy or award on a stage. So in the changing world of definition of ambition, how do you view this?
That's only natural, Krishna, because if you look at the challenges that the boomers faced was very different, right? I mean, my parents and maybe, I'm much older than you, but maybe your parents are closer to my generation. And, the challenges they face were very different compared to what you, maybe as a Zoomer, you face. So I think it's not fair to say that Zoomers are not nation builders or they're not focused on nation building. I think that will be unfair to this generation because in many ways they are the innovators. They are the ones who are launching all the new cool stuff, the startups.
The startups, the unicorns.
Absolutely. So I think the amount of disruption which Zoomers are doing is probably much more than what Boomers did, right? Because they have the opportunity, they have the capital, they have a world now looking at India as a talent powerhouse. And there are VCs queuing up, making a beeline to this country to fund all these young talent and entrepreneurs. And we will see the birth of many such companies will become multinationals. So Zoomers will definitely end up building the nation by default by what they're doing. But I think the approach and the work culture that they bring is slightly different from maybe the Boomers, work ethic, where, a Zoomer is very happy putting his feet up on a beach, drinking a pina colada and, saying that I'm still productive because he is. Because he's actually working on some really high-end algorithm or some such stuff which is creating tremendous value compared to his father logging 10 hours in a government office. Right?
I think Sri, you've just arrived at the core of it all because that's what it is. It might not seem like, even as the Zoomers are complaining about Mr. Narayana Murthy's comment, they are building the nation one way or the other. So, they don't like calling it the way it is, like the way the other generation did, but they're doing it in the way it's much ado about nothing after a point because the 70-hour work week was a term, but the larger point here is about making sure that you put in productive work, keep yourself productive for yourself and for the society around you.
Absolutely. It was a short handle. It's a message which Mr. Murthy was giving to the youth at large. Of course, the IT industry, because that's the industry he has built. He comes from that industry.
Yeah.
But I think his message is to the youth of India at large, saying that unless you put in extraordinary efforts, you're not going to achieve extraordinary results.
Right. And that's the message that we need to end the show with because we've completely run out of time here. It's a lovely discussion we could have continued having, and we will continue to keep having Shri on such discussions right here in Business Plus. So for all those watching, keep watching Business Plus. It's a wrap here from our side this time around. This is Krishna Kumar signing off. Keep it with News 9 Live.
China won't let us rest easy on our borders. but they will keep flooding our markets. What does Xi Jinping really want?
I think he wants the Indian market, no doubt about it. It's really a matter of showing their dominance.
India's great Chinese conundrum.
Nobody can contain it. Not the United States, not China, not anybody else.
Frenemies. This and more. Streaming on the world's